Good afternoon, everyone. This is T3 Live Editor-in-Chief John Darsie here to bring you the daily recap. So today we looked like we were going to have a trend up day and build on the strength that we saw Thursday and Friday in the market, but instead we finally got the return of geopolitical news, which is something we haven't really seen affect the market in a long time. You know, we've seen the Fed policy and all the talk regarding potential tapering drive the market as a macro force, but you haven't seen a lot of stuff regarding, political tensions and things like that really affect the market. But the market moved today to the downside after U.S. Secretary of State John Kerry came out and said that basically they'd gathered information that proves that Syria had used chemical weapons against some of its civilians, and that's a red line that a lot of, not just the United States, but a lot of countries have said that if that line is crossed, then there has to be some sort of reaction, probably militarily, from the West and a coalition of world forces. The complicated part about that is that obviously Syria is in the Middle East. It's a big fulcrum, and there's some forces. There's Russia that supports the current regime to a certain degree, and you have Iran that's very sensitive to any sort of United States coming in and trying to boss around that region. So you have a lot of tension there and a lot of uncertainty about what military action from a coalition like the U.S. and France and people that have discussed doing it, what that could mean for world oil markets, and then what it could do to equity markets as a result of that. So, we are price action traders. We're technical traders here, but sometimes you have to pay attention to the headlines, and geopolitical risk is something that you have to understand as a trader. When you combine that with the fact that we're in late summer trading the week before Labor Day weekend, it's just the perfect recipe for sitting on your hands and not taking too much overnight risk. Tonight, for example, I would not feel comfortable going in, despite the fact that we got some nice price action in the morning from a lot of select stocks. I would not feel comfortable going home with a lot of long positions because the response in world markets overnight, I expect there to be a significant response to what we heard from U.S. Secretary of State John Kerry and all that. So something that I would definitely, if you weren't already sitting on your hands, I would definitely encourage you to not take too much overnight risk unless it's a long-term portfolio type of positions that you're holding. But we'll take a look at the chart of the S&P and show you visually that afternoon sell-off. Like I said, we had some really constructive price action in the morning. All the stocks that we talked about in today's morning call were extremely strong. All the sectors that I talked about that could potentially underperform in a rising interest rate environment, which we are currently in, underperformed. So, we gave you a nice roadmap in the morning call today. Like I said, we pushed above the 21-day in the morning. Looks like additional constructive action. And then you've got a break back below the 8-day and a close right near the 50-day moving average. So basically right now, if you're a short-term trader, you have two pivots to watch. You have today's high, which in the S&P or in the spiders, which I have up here, is 167.30. And the low is from last Wednesday at 164.19. So I would keep it very simple in that way. You have a nice lower level range here to trade against. If we get a break below that pivot low, maybe you get into some shorts. If we get a break back above today's high, maybe you look to get back into some longs. Maybe that means that some of this geopolitical risk has blown over a little bit. But again, I would not be very keen to take overnight risk when you have the type of news like potential U.S. military action in Syria, that it would be opposed by someone like Russia, someone like Iran, and all the stuff that surrounds that. But I'll go into some of those stocks. I mean, the theme that you have to focus on today is that you had really nice price action in the morning from all those stocks that we talked about in the morning call today and some others. But then you had tails in a lot of those stocks that cautions you a little bit that those stocks might need some rest. It did have more to do with the geopolitical news, and the whole market sold off as a result of that. So it's not necessarily a red flag or a sign of caution with the individual stocks, but sometimes you're beholden to the actions of the broader market. But I'll go into these individual stocks anyways, and they had varying degrees of tails and various degrees of sell-off in the afternoon that you should take note of. First one I'll look at is Facebook. Take a look at the chart of Facebook. Really impressive move in the morning, another extension higher as people continue to jump on that bandwagon. A really great bounce off that $36 level that we highlighted in our Off the Charts newsletter, which has been absolutely on point recently. If you're not a subscriber to that, it's $30 a month, well worth the money in my opinion. But you got to move almost to the $42 level for Facebook, but you did get a decent tail down. Not as big a tail as you saw in some other stocks. This is one that I could definitely see continuing to the upside potentially. But like I said, I'm not really keen to jump into more risk at these levels in individual stocks or the market. So I would look for a new base, look for some clarity in these geopolitical issues, and in general just see how the market reacts to the geopolitical issues. There might not be resolution to them, but the market needs to develop a comfort level with the potential outcome to what could happen in Syria. Another one, Tesla. Tesla continues to be a rock star. The narrative on that one today, wrong symbol, was that Tesla is outperforming a lot of its luxury car brand peers in California. They're having better sales numbers than people like Volvo. I can't remember the other brands mentioned, but most of the luxury car brands in California are being outsold by Tesla right now, which is a great sign for them as they gain traction based on some of the recent positive press you've seen. Obviously, a progressive state like California is going to be a little bit more quick to buy electric cars and do things that are environmentally friendly, which is one of the big, obviously, motivations to buy an electric car like Tesla. But you saw a huge tail in Tesla today, and I'll even take a look at the 5-minute to give you some perspective on the price action. I'll make sure we're on our East Coast time template. We'll go to a 13-minute chart. As you could see, huge move higher in the morning on that news of positive sales in California. Topped out here above 172. Then you got a sharp sell-off, actually erased all of the day's gains, but then a nice bounce in the last half hour of the session allowed it to finish with gains of about 1.5%. So nothing to sneeze at there, but when you talk about the gains that were seen earlier in the day, obviously not quite as impressive, but still absolutely incredible price action from Tesla overall. GMCR, another one that we've been highlighting a lot in the Off the Charts newsletter, and it was highlighted as one of Mark Sperling's trade ideas of the week, as was Facebook, as was Tesla. You're noticing a theme here. A lot of these have been really on the front of our watch list and ones that we've been pointing out nice setups on. But GMCR is another one of those that has a high net short interest, and it pushed above a pivot here, and the shorts are on the run a little bit. Yes, it did have a big tail like a lot of stocks did today, but like I said, not necessarily a sign of caution in this individual stock, but a sign of caution in the broader market. So I think it's time to pare down some risk. But this is one that you should continue to keep your eyes on dips if there is a compelling dip, if we do get a sell-off based on this geopolitical news. FedEx is a lower beta name than some of the stocks that we usually talk about, but one that we highlighted last week in the Off the Charts newsletter. Again, one that broke above this nice upper-level base, a multi-week consolidation after a break to new highs, which is what we love to see. It's a prime-time setup from our active trader course. Then you got an extension, a nice rest day on Friday, then an extension today that was really impressive. It gave back about half of those gains in the afternoon, but still a nice move in FedEx, one that, again, showing relative strength. I would look to buy on dips and see if it can't continue higher, see if the market can't shrug off this Syria stuff. MGM and Wynn, the two casino stocks that we've been talking about. MGM has been the leader in that group, and it continued to be so early in the day, but had a big tail, closed well off its highs, but still finished with decent gains, near 1%. Wynn was highlighted this morning as Mark Sperling's trade idea of the week, and it was actually even stronger than MGM early, as you saw a push above this pivot right here, and then the 145 pivot is the other one that we highlighted in that newsletter this morning, and it broke above that briefly before closing back down with a big tail. Once again, like the rest of the market. Sorry if I sound like a broken record, but you're going to see a lot of similar patterns in stocks. And that's often the case when you get geopolitical and macro type news, is every stock sells off. They throw the baby out with the bathwater because everyone just looks to head for the exits and manage their downside. So it's not, there's slightly varying degrees to these tails that we're seeing, but you didn't see very many stocks close on their highs, which is the result of macro news. 3 stocks I think are setting up for potential new trades. I just told you a bunch of stocks that we highlighted that already went. Yeah, big help you are there, Editor-in-Chief John. You're not really giving us anything new or value added, so I'll give you 3 that I think are setting up for potentially new upside as long as the market keeps its footing and stays together. Sorry, I just talked in the third person there. Maybe I'm becoming a little bit of a prima donna after my video appearances, but talk about Apple. Apple, nice multi-day consolidation here, descending channel. Look to be breaking above that today with a really nice setup. This is one that I sort of help Mark every Monday morning go through and go through a list of stocks and identify what we believe to be the best setup for that week. Apple was a close second today to Wynn when we put together that trade idea of the week newsletter, and it was really nice early. I was sort of kicking myself, even though Wynn was also strong, but Apple, nice price action, did close well off its highs like everything else, but still just consolidating above its 8-day as far as I'm concerned. You have a new product launch in about 10 days, or maybe a little bit longer than that, where they're expected to unveil the new iPhone. So that could be a catalyst for the stock. Sometimes it tops out several days before those events, but I still expect to see it challenge these pivot highs here. In a sector that I introduced to the T3 Live community and I talked about several months ago was the mortgage servicers. NationStar, Ocwen, these are companies that are taking the mortgage portfolios of the big banks. Due to new regulations, these big banks are having to sort of spin off these mortgage portfolios and let mortgage servicers service them and get the payments on them. And these are companies that had a lot of potential and were sort of flying under the radar, that have had really nice price action this year. They had a period where they sold off sharply several months ago, and I think people sort of put them off the radar after that. But then they've continued, made new highs, and then they've put in some nice multi-week consolidations at upper levels that now look like they're getting ready to break to the upside. So the two best and biggest in that sector are OCN. Take a look at the chart here. It looked like it was set to break above this today with potent gains, but closed off its highs. So something to keep an eye on. Again, it was the result, that sell-off in the afternoon, of the broad market weakness. So this is something I expect to potentially break out. In SM, NationStar, they have a lot of the mortgage portfolio of Bank of America. It wasn't quite as strong as OCN in the morning today, but it's above all of its moving averages. It got a nice move off its 8-day today, and I expect to potentially see more upside in NSM if the market can continue higher. Even if the market doesn't continue higher, at least finds its footing and doesn't implode due to geopolitical risk or a surprising Fed taper in September, even though I don't think that would be surprising at this point. I think there's a lot of macro forces right now that you have to watch more than you would like. We love the market where you don't have to pay attention to the headlines, you don't have to pay attention to the Fed, you don't have to pay attention to tensions in the Middle East potentially affecting oil markets, but you can't pick and choose what markets you have. You have to go with what you got. And right now that's what we've got, and the market's been pretty good to you in 2013, so don't bite the hand that feeds you. But that's about it. Again, focus on geopolitical risk headlines in what could be a quiet week as a recipe for sitting on your hands, keeping your risk low, and maybe enjoying some early days as we get towards the end of summer. This has been John Darsie here for your daily recap. We'll see you out here tomorrow morning. Scott will be back with Brittany.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.